Of course, in response to a steep surge in inflation in January, Nigeria's central bank also put in a surprise to the markets yesterday. It raised the policy rate to 12% from 11%. It's also tweaked other elements of monetary policy by increasing the cash reserve ratio to 22.5% from 20%. Now, this decision comes just 4 months after the Monetary Policy Committee slashed that very CRR rate in order to inject a bit of liquidity into the system. The expected outcomes, however, have not been realized. Let's find out why. Deji Badmus joins us live from Lagos right now with more data. Deji, many didn't expect this rate hike in the first place to come through from the NPC. What sort of reactions are you getting?
Well, Rama, I'll tell you that the bulk of the reaction have been negative. Most analysts here are not in support of the decision of the MPC. As a matter of fact, most of them said it actually took them by surprise, and they've been giving their reasons. For instance, we know that this government is planning to reflate the economy, and that's the reason why it's announced an expansionary budget of about $30 billion. And so people are finding it difficult to reconcile that with the decision of the Monetary Policy Committee to tighten, because basically what the Monetary Policy Committee has done is to tighten, tighten and pull out money from the system. Of course, the Monetary Policy Committee is basically looking at the foreign exchange and, of course, the 11.4% inflation announced by the National Bureau of Statistics. But most people have spoken to here have said it's a very wrong decision and that it will make nonsense of the government's policy to reflate the economy, and that it will prevent the government from having the desired effect now it intends to with the budget, Rama.
Indeed, the MPC also in its statement after the meeting also essentially alluded to the exact same thing you're talking about now. For on one hand, it acknowledged that forex scarcity is contributing to Nigeria's slow growth, but at the same time, it's very reluctant to devalue the naira. Why is that?
Well, the MPC has made it very clear. The central bank has made it very clear for a very long time now that it does not intend to devalue. And I think if the MPC had actually intended to devalue, we probably would not be seeing some of these actions being taken. For instance, probably CRR would not have been increased to 22.5%. And, monetary policy rate would probably have been left the same way. But there's no question at all that the CBN does not intend to devalue. It has continued to maintain that devaluation would not help the economy at all, and that Nigeria is not an export-oriented country, and that you only devalue when you want to help local exporters. But in this case, you don't have them. So that we just have to look inwards. And then basically the MPC making it very clear that Nigerians should just pray that the price of oil continues to go up, then we'll be able to solve, the problem we have now with foreign exchange. That as soon as price peak, that the more prices actually go up, I'm talking about oil prices now, the more foreign exchange we'll have at our disposal, and that things would normalize. But in terms of devaluation, it has made it clear, the president too has made it clear that there's not going to be any devaluation at all. And if you ask me, Rama, I think this is a clear statement of intent from the MPC that it does not intend to devalue at all, because if it was going to devalue, it probably would not have taken the decision it took yesterday, Rama.
Indeed, nailing its colors to the mast, so to speak. We'll leave it there for the time being. Thank you for that. That's Deji Badmus live, of course, in Lagos. It's an interesting study in monetary policy. We'll keep tabs on it.